Starting, all attendees are in listen-only mode.
Good afternoon, everyone, and welcome to Sage's webinar to design some further clarity and guidance over the UK Government Job Support Scheme. As you're listening to this webinar, you may be aware that our Chancellor at this very moment in time is making some amendments to the Job Support Scheme and also how it may affect certain tiers. We'll do our best to bring in this new changes as we go through the webinar, but like everything, please monitor our blogs, our regular Q&A sessions and further webinars over the next coming weeks in terms of how you can operate these within your business. So my name is Chris Downing and I'm one of the product directors here at Sage for the Accountants Division, and will be your host today during today's webinar, and we'll be speaking to the panelists to discuss actually the various content and the subject matter around the change from the job retention scheme to the new job support scheme and bonus scheme going forward. The webinar and the panel and the Q&A should last about 40 to 45 minutes, which will then provide 10 to 15 minutes for Q&A from the attendees of today. As you may appreciate, we are still working from home, and hopefully there shouldn't be any sort of technical difficulties and hopefully very little background sound. But if there is some, we do apologise. But before we move on to the actual main event, let's deal with some housekeeping first of all. As you can see, your microphone should be muted automatically and it will remain muted throughout the whole of the session. As we mentioned, there you've got the ability to answer questions, and there's a little Q&A chat bubble. By clicking on this, you'll be able to ask a question to one of my many colleagues from the Payroll and HR department, who will do their best and actually respond in a typed format. However, just to pre-warn you, we have over 1,000 registrations for today's webinar, so it's going to be quite busy on the Q&A help desk, so please be patient. But also it may be sensible just to actually wait until we actually get into the webinar, because I suspect some of your specific questions will be answered. If we can't answer all your questions, we'll do our best to actually maybe do a further blog and webinar to cover these items over the next couple of weeks. So as we may appreciate, we're doing our best on the current legislation and things may change. But so therefore what we're talking today is based upon guidelines and subject matter, but hopefully you'll find today's webinar really useful. In terms of other buttons available on the GoToMeeting chat panel, there's the ability to, on the download handouts, where there'll be some useful external links to get further advice and guidance. Plus also there's a switch to full screen item. So if there's any detail on the screen which you want to see in greater clarity, just switch on that and you can go into main screen. So let's kick off with the webinar today. So before we sort of go into the main content, it'd be worthwhile to actually sort of introduce to you the experts we've got today. So Yogi, over to you. Could you introduce yourself, and then over to Sarah, Steve and Adam. Thank you. Over to you, Yogi.
Hi, good afternoon, everybody. I hope you can hear me. My name is Yogesh Tanak, or Yogi for short, and I'm the Technical Advisory Manager at ACCA UK, one of the largest accountancy bodies in the world. My background is in practice until recently when I joined ACCA. And you know, I help members of the ACCA with technical queries. That's my brief introduction there.
Sarah?
Hi everyone, pleasure to join you today. My name is Sarah Robinson. I'm a HR technical consultant at Advisor Plus. My background is very much generalist HR. I've been in the HR profession for probably about 12 years now, across a variety of sectors and roles. And yeah, pleasure to join you all today.
Steve? Steve, are you on mute? Or we lost contact? So while Steve recovers his mute button, over to you, Adam, please.
Hello, and nice to speak to everybody today. My name's Adam, and I'm one of the Vice Presidents of Product Management at Sage. I look after tracking all our compliance requirements globally to make sure that we provide the advice and the product capabilities to support both our users and their advisors.
Thank you very much, all. And Steve, are you here yet or not?
Thanks for that, Chris. Sorry. Hi, I'm Steve Watmore. I'm a Payroll and HR Product Manager at Sage. I've been working in the payroll industry for just over 23 years. I've worked all the way through the GRS scheme as a product manager for Payroll as well. So yeah, I hope to give some real good advice today.
Brilliant, thank you very much. Now, clearly, the main subject matter of today's webinar is the job support scheme, the job bonus scheme. But clearly, it wouldn't be go amiss to actually have a quick summary of what's happened over the last 6 to 7 months of the job retention scheme. This has been one major piece of legislation where basically the calculator has probably not been used as much as it has done in the short period of time. Now, the JRS is closing towards the end of October, but really, Yogi, could you sort of give a quick update in terms of what's happening, any plans in terms of changes, and if there's anything particularly we should be mindful about over the next couple of months in terms of as this closes down?
Yes, thanks, Chris. Yes, as Chris has mentioned, obviously the job retention scheme is going to end on the 31st of October. What people would want to ensure is that they've made all the claims, or they're prepared for making the last final claim before it closes. The date, as it says there, is the 30th of November for making that final claim. Crucially, though, it's ever more important with the scheme that any overclaims that have been made in the past or any errors that have been identified in the last few months, HMRC is insisting that they need to be repaid, and there are certain key dates for repaying any overpayments, failing which there will be penalties chargeable. So this is something that everybody should be looking at carefully to ensure that they've made the correct claims, and if not, that they do correct them in time. There is, of course, a new card payment facility that's been added to make it easier to make the payments back to HMRC. But of course, any other payment schemes or methods can be used as well. Chris?
Yeah, thank you, Yogi. Now, the job support scheme was announced earlier in the month, so clearly to help support businesses through the winter time as things become difficult again. Now, Yogi, this is another potentially complex scheme which needs to be managed appropriately by businesses as well as understanding which employees qualify. Could you sort of give us a brief overview in terms of how businesses may qualify for the grant, and also more importantly, are there any particular rules around the type of employees who can actually be brought into the scheme as well?
Yes, thanks, Chris. Yes, as you mentioned, it's a very complex new scheme. It's been made even more complex with the different tier levels of COVID that the country is facing. And as we speak, as you mentioned earlier, that new updates to the scheme are being announced as we speak. So whatever information we are likely to give here is going to be the most up-to-date as of yesterday, but we will obviously try and bring in a few of the updates as we speak. But in general terms, what businesses can qualify for the grant? Well, it's basically any employer with a UK bank account and a UK PAYE scheme that will be eligible. They will need to have made a PAYE submission on or before the 23rd of September 2020. That was the day before the job support scheme was initially announced, which was on the 24th of September. For most businesses, which is the small and medium enterprises, that is kind of the only eligibility requirement in terms of their PAYE scheme and having a UK bank account and PAYE scheme. For larger businesses, though, there are expected to be some checks in terms of whether the turnover of the business has indeed been affected by the COVID situation. And there'll be certain expectations that they don't make large dividend payments or capital repayments of certain things. Those sort of issues are going to be more clarified in new guidance that will be coming out. But mainly businesses do not have to have used the job retention scheme, which was in place up to 31st of October. So anybody who wants to use it now and is affected because of the new closures can claim. There is one caveat there, which is that businesses that are closed or have been required to close as a result of specific workplace outbreaks by a local public health authority, those will not be eligible for the scheme. But if it's a general closure because of the tier closures, then as long as you've got a UK bank account and a PAYE scheme, you should be eligible. In terms of employees, the same sort of rules that they should have been on a PAYE submission that has been submitted to HMRC on or before the 23rd of September 2020. The employees don't need to have been furloughed in the job retention scheme before. So any employees that have even not been furloughed in the past can be eligible for this. Now, originally the rules had stated that the employees will need to have worked or need to be working at least 1/3 of their usual hours, with the payment of those 1/3 hours being made in full by the employer. That has now been announced as 20%, so 1/5 of the usual hours. That is the minimum they should be still working to be eligible for the claim. Every time that they are asked to work those reduced hours, it should be a block of minimum of 7 days, and they can come on and off the reduced hours working arrangements, but every time they're put on it, they have to be put on it for at least 7 days. Other than that, those employees should be able to qualify.
Brilliant, thank you, Yogi. Yeah, so clearly a lot of detail to consume, and this is why it's so important to actually read the legislation. And this is why on the slide there we've got the hyperlinks to the .gov UK publications, so always sort of keep an eye towards that. Now, Steve, as you're the numbers man, always buried in payroll and have the fun and games of dealing with the JRS calculations. So the all-important question is, how much must you actually pay your employees under this scheme? And also, how much sort of grant can you claim? Are the calculations complex? Plus also, has our friend Rishi made it slightly more complex for you in the last 10 minutes?
Thanks, Chris. Thanks, Yogi, for that intro. There are some rules, and they are changing, so we've just seen some changes. So up until today, under the JSS scheme, you had to work 33% of your hours to qualify. An employee who's working less than that, it wasn't, they couldn't be processed, they couldn't be in your payroll, they just weren't suitable for a JSS claim. Rules we've now been advised, or the announcement this morning, is that the amount of work you will need to do will actually reduce down to 20%, and then above that, the employee is then viable. There will be some detail to follow in terms of if it's specific to tier 2 or if it's all tiers, and we'll follow that up with everybody when we know that information. But what it means is those employees that are doing any hours, and 33% and 20% are just guidelines as a minimum, but obviously the employees can work more than that, it's great. Those employees will have to be paid at full normal rates for the hours that they do work. That's normal, that'll be tax denied, and that's just normal income because it's earned. Where there's then unpaid income, the rules prior to the announcement just now have been that there will be, the unpaid hours will then be split into 3. A third will be funded by the employer, third will be funded by HMRC, the government, up to a cap around just short of £700 a month, and then a third will be effectively lost. That will be a reduction in wages for the employee. The new announcement, again relating to certain tiers, we'll verify that, is that the employer is actually only going to be contributing 5%, and the government is going to make up the other portion. So out of the 2/3 that is going to be paid of the unpaid earnings, it was going to be 5% for the employer, and 62% by the government. And we'll confirm these details as we get more through for which tiers that affects. The other cost that has to be considered in this is the employer is still going to be liable for the national insurance and pension on any income that goes through against this employee. Obviously, earned work money is normal, but the unpaid hours that's covered by the job support scheme will have national insurance and pension contributions due on it if at a level that claims that, and there is no claim back on that. That is a cost to the employer.
Thank you, Steve. Now, clearly, if we perform the calculation correctly, we obviously want to make the claim. So how long do we have to actually make these claims? And can we claim in advance? Because as we know from the JRS, it's a bit of a team effort between the employer and the accountant and the payroll department. So it's all about sort of managing expectations here.
Yeah. So hopefully the claims process for this should be a little bit easier than the JRS, because it's not, because the employer's national insurance and pension aren't part of that. You should be able to see very quickly, and we're, again, at Sage, we'll help our customers process and get these figures. The value that you've paid across, would be the HMRC contribution, is the amount you will claim back. That is claimed back in arrears, so the government have stated that you will not be able to claim back until the end of the calendar month. So anything that you pay in November, you'll start claiming from the 1st of December. The indications are you may have to do individual weeks or individual claims or monthly claims, but we know that under the nature of the scheme, the JRS scheme, that we didn't want, there was a problem with periods overlapping or closed periods. So it should follow a similar scenario as the JRS, but as we get details on exactly how you make the claim or what you upload, we'll supply those. But in terms of the date, you have from the following calendar month. And in terms of how long you'll have to claim for, as the scheme is currently running for 6 months and is stated as such, the expectation was you'll have all that period in which to claim, plus when the scheme ends 12 months, exactly like JRS. The only difference with JRS is that the scheme was cut into JRS 1 and 2, so they were classified as separate schemes. So you had a month at the end. At the moment, the job support scheme has been defined as a 6-month period, so you should have a whole claim period through there to make your claims. But again, I think the expectation will be more employers will be claiming as soon as they can, and that soon as you can is from the first day of the following calendar month.
Thank you. Now, if we've received the money or the grant itself, Adam, I remember from the various queries on forums and other questions that people are getting confused in terms of actually, how do I account for these grants? Are they taxable, non-taxable? Is VAT involved? Can you provide some sort of clarity over this, Adam, please?
I can. We're expecting formal clarification from HMRC in due course, but the expectation is that these grants will not be subject to VAT. They fall outside VAT's normal rules, but they will be subject to income tax. So people should account for it as with other income sources and expect to pay the corporation or personal tax at the year end.
Thank you.
The other thing that I would recommend is that people account for it as a debtor as normal. So set up separate debtor accounts for the different grant schemes. That will make it much easier to reconcile the amounts received, especially as we don't know what's going to change in the future. Some of these changes are retrospective, some are not. And so it may be that the value of grants needs to be adjusted, and having separate accounting records will simplify that.
Yeah, it's all about having really good, clear records, I think, and especially with the timing. People trying to sort of match expenditure to income and really understand the performance of their business over the next couple of months. Now, with anything, there's always a degree of administration. And Yogi, like everything, we want to sort of validate what has been claimed and how do we actually correct for errors, because quite unfortunately errors are made. So from your side, what's the possibilities of actually reviewing previous claims, and if an error is actually identified, what's going to be the practical process of actually trying to correct these as well going forward?
Thanks, Chris. As Adam mentioned just now, record keeping is obviously going to be really crucial. What we have so far been advised by HMRC, obviously this portal is not yet open, is that they are intending to have very similar functionality and processes. So the look and feel of that portal will be very similar to the JRS scheme and that portal. So we are expecting that there will be similar functionality in terms of correction of previous claims. But yeah, like all the other claims made in the past, it is imperative that claimants keep those records. There's a good audit record of all the claims made, good records available. In terms of errors, obviously this new scheme now with the JSS, the claims are going to be made in arrears. So hopefully the expectation is that there will be fewer errors, because you will be basing the claim based on what has already been submitted via RTI for the previous month, and those are the amounts you will be claiming. But like I say, you know, with all things, as you mentioned, errors can creep in, so just keeping good records is crucial. But we expect that there will be similar functionality in terms of correction of errors as with the previous portal.
Thank you. And like everything, because of the timing situation in terms of one scheme closing, the other one opening, and the arrears of the current one as well, is it possible to sort of make multiple claims in the same month, or are people having to be really quite clear in terms of when they're making the claims? Do you think there's going to be some sort of ease in terms of from HMRC in terms of how people can actually make them over the next couple of months?
So the date for the last claim for the JRS is 30th of November. So that, you know, whilst this new scheme is actually opened up in November, that scheme is still open for making those last few claims in terms of overlap between the two schemes. With the JSS scheme, the claims are going to be made in arrears, so in monthly amounts. So you would expect that the first claim would be made after the 30th of November. So hopefully there's not going to be an overlap. But another point that I might possibly bring in there is that there might be businesses where some branches are in one tier whilst other branches are in another tier. And again, you know, we'd have to wait for further guidance from HMRC. But in those circumstances, I would expect that they would be able to make different claims for those different elements of their business within those same months.
Thank you. Now, you made mention about keeping really good records, and as we know from the press, there may have been some sort of a post-JRS audits being performed by HMRC. So how long do we have to keep these detailed records for? Are they the same like any other business records?
I'll step in here. They are the same as other business records, so 3 years after the end of the tax year for payroll records. However, there's somewhat buried in the detail that HMRC can ask to see evidence that employees have agreed to reduce schemes and ask to see evidence from the JRS scheme. So I would recommend that people keep all their records relating to all their grant claims, including all the calculation basis, for at least 3 years after the end of the tax year in which they make their claim.
Fine, thank you. And then in terms of actually the pay which the employees receive, can the employer actually top up to the expected levels, or is there an expectation to do so or not? Yogi, it's a question for you, please.
No, as far as we understand from the original guidance that came out, HMRC was expecting that employers wouldn't be expected to top up pay, and I suppose the principle behind that is that if you can afford to do that, you should not be using the scheme to get those grants. Having said that, you know, we need to monitor the new guidance that the detail that comes out. There could be changes in there that might make provision for top-ups, as was the case with the old JRS scheme as well. So we'll have to wait and see. But as far as we know from the guidance so far issued, they are saying they wouldn't expect employers to top up pay.
Thank you for that. So on to the next section. So the job retention bonus. Again, it's another initiative brought on by Rishi and the government in terms of actually to help businesses and also not only encourage the employment of people ongoing. So Yogi, another again bit of a technical one because you know the subject matter really well. How does a business qualify for this, and is it quite complex to do so?
This is where again, yeah, that crossover between the different schemes gets a little bit complicated. So for the job support scheme, we heard earlier that the employers or the employees need not have been furloughed in the past, whereas this one is tied to that furlough scheme. So for the job retention bonus, only those employers who did use the furlough scheme and only those employees who were furloughed in the past will be eligible. And the bonus is to basically incentivize employers to retain those members of staff that they had previously furloughed. So once the furlough period ends, whatever that may be, the employee might have ended the last furlough period in June, July, or they could be furloughed right up to the end of October. They need to then have been continuously employed since then, all the way up until the 31st of January 2021. So the incentive is to just keep them in a job. There is a threshold of minimum income as well that they need to have been paid. That will apply only for the next 3 months, so the months of November, December, and January, effectively. It will be, I think it will be measured from on a tax month basis from the 6th of November to 5th of February. And the expectation is that overall, over those 3 months, they must be paid a minimum income gross taxable pay of £1,560. Now that averages out to 520 per month, but those who are not paid regularly or in variable amounts, they don't need to have been paid an actual 520 per month for each of those months, but overall for those 3 months it needs to add up to 1,560 in gross taxable pay. The job retention bonus portal is not yet open. That is going to open on the 15th of February 2021, next year. It will be open for a very short time, for a period of only 6 weeks. So it's going to be open from 15th of February to the 31st of March. So again, claimants, what you would want to do now is to just start preparing a list of those employees you had furloughed, and you think those who are going to be retained throughout that period. You start preparing for the claims. As soon as the claim portal opens, then you can claim that. We are told that agents will be able to claim on behalf of clients on that portal. But again, more details are awaited on that in terms of how agents will be able to help their clients on that.
Thank you, Yogi. Now, assuming businesses can qualify for the bonus, question for you, Adam. How would they go about claiming for it? And also, more importantly, how do they actually account for it as well? Because it's another sort of grant income, and therefore, how do they deal with it in timing? And again, is it about having good, clear controls in terms of their accounting system?
Yes, and I think Yogi's already covered the process to a large extent. We're expecting a portal to be opened by HMRC, similar to the job retention scheme, but they haven't confirmed that yet. HMRC have already announced the very short window for businesses to make the claim. I say businesses as employers to make the claim. So that's pretty much all we know for certain. There's one other minor quirk. We're not expecting the job retention bonus to be VATable, so there shouldn't be any VAT on that income at all. If you're a normal employer running a business, it will be taxable though for income tax or corporation tax. For individuals with employees that they are not part of a business, for example, nannies or domestic staff, the job retention bonus will not be subject to any income tax either, which is a rather unusual quirk. And we'd anticipate that they will be a bulk claim process for employers that have got a large number of employees, but HMRC have not been able to confirm that yet.
Thank you, Adam. Now, Sarah, over to you. I know we haven't asked you many questions to date, but this is where your experience and expertise is very important. Now, clearly, businesses are going through an awful lot of turmoil. They're making really difficult decisions about their businesses going forward. And though these initiatives are very useful and timely to businesses for them to actually sort of think about the type of people they need to employ and retain them going forward, there will be decisions about redundancy. So if you've got employees which are coming under one of these schemes, can they actually be made redundant? What are the rules around that, please?
Yeah, okay, so employees who've been on furlough can be made redundant, but the rules are different when it comes to the new job support scheme. Government guidance is clear that employees cannot be made redundant or put on notice of redundancy during the period within which their employer is claiming the JSS grant for them. What is unclear, however, is whether this means that you can at least start the consultation process and put employees at risk while claiming the grant, provided that you don't issue notice of redundancy. So we're just waiting for guidance on that point. But current guidance is that you can't make somebody redundant whilst you're claiming the JSS grant. It's likely that many businesses will already be going through the redundancy consultation process and looking to conclude this by the end of this month due to the furlough scheme ending.
So therefore, is there going to be any changes to the redundancy period? So if they're already going through consultation, is that going to change the redundancy periods? And also going forward, is there going to be an impact in terms of how they sort of work out hours worked or holidays or unpaid leave? Is that something which is contractual, or is that something which they just need to be managing on a case-by-case basis?
Yeah, so with regards to redundancy periods, the usual obligation to consult with staff individually and collectively about redundancies applies irrespective of whether staff have been furloughed or they've been on the job support scheme. What this means is that if you're making 20 or more redundancies in a 90-day period, there is a 30-day minimum consultation period that does apply. And this actually increases to 45 days if you're making 100 or more redundancies. So the time it will take to consult does need to be taken into account by businesses. The other thing to consider as well is that when making employees redundant, the statutory minimum notice period will apply, which is 1 week per complete year of service, and this is capped at 12 weeks. And also employees with 2 years service or more will also be entitled to statutory redundancy pay. The amount that's paid will depend on the employee's length of service, their age when they're made redundant, and their weekly pay. But the maximum amount payable is currently £16,140. So businesses do need to take into account the minimum consultation periods, notice periods, and redundancy pay. A final thing on that as well is that you need to have consideration for contractual terms and conditions, because these may be more generous than statutory. So it may be that you need to pay enhanced notice pay or enhanced redundancy pay, depending on what's in your contract. If you find that redundancy isn't a suitable option for you as a business and you want to bring employees back, but you do need to reduce their hours, then you'd either need to seek employees' agreement to a reduction in their hours, or the alternative is to consult with them, because you may actually be making a change to their terms and conditions of employment. So consent is the easiest thing, and sometimes having open and honest conversations with employees is the best way to go about it. If they understand that it's for the greater good of the business and that it may save jobs in the long term, employees may be more likely to agree to a temporary reduction in hours. And if they've previously been furloughed and your business is going to remain open, they may even see this coming. If you are going to have to consult to change terms and conditions of employment and reduce hours, then it's recommended that you do seek specific advice on this, because the rules are quite complex. A couple of other considerations is that if you've got a layoff or short-time working clause in your contract, you could look to implement that. Layoff refers to not providing work for a period of time, and short-time working is a reduction in hours. Likewise, if you don't have a clause in your contract, you could seek employee consent to implement that. A couple of other things you can also consider is if the downturn in work is likely to be for a short period of time, you could either ask employees to take unpaid leave, which again would require their agreement, or alternatively you could ask employees to use their annual leave. One thing a lot of businesses don't know is that unless your contract states otherwise, you can tell employees when to take their annual leave, but you need to give them twice the amount of notice as the length of the annual leave. And then one final consideration is a pay reduction. So we've talked about reduction in hours, we've talked about using holidays, but if you're struggling and again you need to bring down the wage bill, the final thing is a pay reduction. Similar to a reduction in hours, some employees may be agreeable to this, and I know many businesses that have agreed this with employees, because they understand that in the long term it may save the business and it may save their jobs as well.
Thank you, Sarah. Very informative, very useful points there. Now, we've been talking today about the various measures in terms of securing and paying people during these very difficult times. But actually, the government has put in place a number of different measures, whether they're loans, grants, options to sort of defer your various taxes. Now, Adam, you're a bit of an expert. I would love to bring your expertise in terms of, is there anything which business owners should be aware of today? Are there any sort of immediate changes to the various SIBLs and BIBLs? And is there anything else we should be thinking about various tax allowances? Because it's quite a broad spread of measures currently available, and things are continuously changing. Is there sort of any particular update you want to provide us?
So yeah, there is a lot of support available. Some of it's changing literally today, some of it's slowly trickling out. So I'll just go through them in some sort of order. The first is for any, particularly for the accountants in the audience, if they've got any self-employed clients. The original self-employed support scheme has closed, but there is the second scheme that will pay out as 2 grants, one for the period 1st November to 31st January, and the second from 1st February to 30th of April. As of first thing this morning, those grants would, the first of those grants would be paying out at 20% of the average monthly trading profit, capped up to 1,875. However, in the last hour, it's been announced that that cap will increase to 40%, so up to 3,750 per quarter. HMRC and the Chancellor haven't yet confirmed the value of the second grant. My guess is it's going to be similar value, but we know how fluid these things are, so it's a watch this space. But this is for the self-employed, and so they literally just need to make the legal statement that their business has been impacted negatively due to the coronavirus. The second area is the grant scheme that's available to rateable businesses that are paying rates. And again, this is changed today. So for businesses that were normally open and provided in-person services, but were required to close for at least 2 weeks due to a local lockdown under the national scheme, there was support available. And as at this morning, that would have meant if the rateable value was below £15,000, then the business could receive £667 per 2 week period. If the rateable value was between 15,001 to 51,000, then that went up to £1,000 per 2 week period. And if the rateable value was over 51,000, then that was 1,500 per 2 week period. I say 2 week period because prior to the expanded jobs support scheme, that was actually for a 3 week period. So the value has stayed the same, but the period has decreased. As of lunchtime today, though, for businesses that remain open but are negatively affected, then local councils can provide a grant of up to 70% of the amounts I just shared. And there's an additional discretionary amount that local councils can provide for businesses that don't pay any rates at all. So that should significantly help businesses that are seeing a downturn to cover some of those capex costs, rent, etc., that you've got to keep paying irrespective of whether the business is open or closed. Another benefit worth calling out is the working from home allowance that last tax year was £4 per week. This tax year is £6 per week without needing any evidence. Any employee can also claim actual expenses, but then they've got to work out square footage of dedicated office space, actual costs to heat the house or whatever, and it can get quite complicated. But for people who are working from home with large dedicated spaces, accountants may well be able to provide some very value-added advice there. Although it's not yet formally published, HMRC has confirmed to a number of people, including Sage, that if a employee works from home for even they can claim this £6 per week working from home tax benefit for the full tax year. So that's quite nice. And I've seen some updates from some news sources today claiming that this is a nice Christmas gift from the government. The SIBLs, the BIBLs, the government-backed loan schemes have not changed today, but remain a very valuable source of cash and funding for businesses. And quite recently, the Chancellor extended the payback period of those. And for the first 12 months, the government covers all the costs, both the setup and the interest, so that businesses only have to repay that loan. The last benefit that I would call out is the time to pay, which has been there for years and is a business that is struggling to meet their HMRC obligations, Crown debt. They can contact HMRC and ask for additional time to pay. That has been ramped up significantly due to COVID, and there's a number of options now available for anybody that is struggling to pay any of their Crown debts, VAT, income tax, corporation tax, etc. I'd recommend that they first do a Google search for the HMRC time to pay, and then talk to their tax office to agree an appropriate basis, or take advantage of some of the pre-canned schemes that are available on HMRC's website.
Brilliant, thank you, Adam. An awful lot of detail, and thank you for keeping us up to date in terms of the things which have been happening today as well. Now, Yogi, in the last 42 minutes, we have covered an awful lot of content, whether that's the transition from JRS, looking at the details of the job support scheme, the qualification criteria of the job retention bonus, plus also what the various HR points which Sarah's brought up, plus also the various other measures. This is an awful lot of legislation, support plans, details, records to be maintained, plus calculations. For a typical small business, this is quite overwhelming. So therefore, should businesses be doing this by themselves? Should they be getting help? And if they need help, where they should be looking for this help, Yogi?
Indeed, Chris, as Adam mentioned just earlier, there's so many different support schemes that's currently in place. And by all means, of course, people can do this themselves. There is guidance available on the internet about this. So, people can, if they wish to do it themselves, do it. But with the type of complexities we've seen in all the various different schemes and everything, I think accountants would be best placed to give advice to clients. I think they have been at the forefront over the past few months in terms of providing support to clients on all the various financial support measures, and drilling down to the details that come up within the guidance that's been coming out. They are able to quickly get up to date on the various support schemes available. And for a lot of the schemes, they've been actually able to assist clients with actually the claims process itself, albeit for the self-employed income scheme support. Accountants were not able to make that for clients, but for all the other ones, the accountants can do that. And we've seen, of course, that there's a lot of emphasis being placed on good record keeping, and that HMRC is going to be undergoing various checks with many businesses. We understand a lot of businesses have already been issued with letters asking for details on those claims. So that's where I think accountants can add value in terms of dealing with those inquiries in a very costly, effective, and time-effective manner, because these things can be very costly and time-consuming. And right now, people want to be concentrating on running their businesses rather than dealing with HMRC queries. But also accountants can, add more value by advising on other aspects of the business, like cash flow planning, and as Adam mentioned, access to all these various finance options. Obviously, accountants as a community have all the support from their supervisory bodies, and they have as a community support from each other as peers for technical matters. So they're more knowledgeable and experienced in all these wherever it's the tax claims are to be made, or various claims are to be made. So I would say, whilst people can do it themselves, accountants would actually be a better place to do this for them. And that's where accountants are, kind of the unsung heroes as well during this pandemic.
Yeah, thank you, Yogi. And yes, it's been unprecedented times and unprecedented demands on small businesses, but also I've been hearing and seeing how accountants have effectively been that additional emergency service to sort of help small businesses sort of survive, but also think about what the future is going to be like and also be better for the future. So that ends the first part of the webinar, the main element. Now I can see from, so I must also thank our panelists for their insight and their valued advice. Now the Q&A section of chat has been literally buzzing for the last 40 minutes or so, and my colleagues have been pinging me some of the more sort of common questions which have been coming through, which they have answered, but probably quite useful for the rest of the audience to listen to. Now this is a question for you, Yogi. So a question on the job support scheme, and basically, are directors eligible for the job support scheme?
So as with the previous scheme, as long as they are on a payroll scheme and they are being paid by a payroll, they should be eligible. I don't see any reason why they shouldn't be. With the job support scheme, obviously there is no requirement to completely cease working. In fact, there is a requirement to do some work. So that should enable directors to continue to do some work and therefore be eligible for this. But it will only be, of course, just the PAYE element of your income from the company.
Okay, thank you. Question for you, Steve, please. Under the job support scheme, do I need to report and submit the hours for a salaried person, or will I be able to report the financial value only?
This is a good question, Chris. This is one of the questions we're still getting some detail on. But the indications are right now that you will need to record the hours, because under the rules of the payslip and the rules of an employee, when their earnings change because the number of hours they work change, the payslip is supposed to be reported that way. So our initial indicators to our customers when we've done webinars already have been about recording specific payment lines, one for the paid work and the hours that have gone through, then splitting the unpaid work between the HMRC contribution and then employer contribution. Wherever possible, we've advised if you can record the hours you would, because I think from an auditability point of view, and quite probably as part of the claim criteria, you'll need to show the hours as well. This is all to be confirmed. The guidance we're giving right now is we believe that the hours should be recorded in that way. And under payslip legislation, you're generally supposed to show hours if the employee's earnings go up and down depending on these.
Thank you, Steve. Now, another question for you, and you may provide a sort of similar answer because we're just waiting for clarity. But how are usual hours calculated for the JSS scheme? Will it be the same as the JRS, or will there be a different approach to it?
So usual hours wasn't part of JRS. JRS was only usual income, but the methodology in terms of the period you'd look back to, the same period in the previous year or over a predefined period should be the same. The outstanding questions we have now are, what is that previous period? Is it still going to be the tax year that ends April 2020, or is it going to be a period more closer to when the JSS scheme starts? The methodology should be the same, but it will be based on hours now. The JSS expanded scheme, which is around 2/3 of your income, that should be exactly the same methodology, because that's purely about your earnings.
Thank you, Steve. So this is possibly a question for either Yogi or Adam. So the question is, a business who is allowed to be open but has closed as they have no trade, for example, there are events businesses out there, can they claim under the JSS? So they've basically, they are allowed to open, but they have closed. Are they still able to claim?
So the requirement under JSS for businesses operating anywhere apart from the very highest category is that employees must have worked a minimum percentage of their usual hours. That was 33, sorry, a third of their usual hours. It's now reduced to 20%, a fifth of their usual hours. So the answer would be that they cannot claim under JSS. However, they may be able to make a claim under the newly announced local restriction support grant scheme for businesses that have closed voluntarily.
Brilliant, thank you, Adam. Another question for you, Steve, please. I know you were very much in the middle of our JRS module earlier in the year. That was a bit of a heavy lift by your team and the engineers. But the question which we have here now is, are Sage updating their software with additional reports or a new module to help with the calculations and submissions?
Thanks, Chris. So Sage have multiple payrolls. We have our cloud native product and we have our 50 payroll product that have the module in it. And we are building solutions for customers across the board. And where we can, we will create solutions that are available for both products. These may take the form of reports or some sort of calculator values that we can give that sit slightly outside of the products as well. Because of the timing of this project goes live, or this scheme goes live on the 1st of November. So the likelihood of doing a module in that time is not high, but it doesn't mean we won't progress that through the rest of the 6 months that this scheme is running for. But we will definitely have guidance, step-throughs and report help available by the end of next week for our customers to get them going in November.
Okay, thank you, Steve. Now, unfortunately, there's another one for you. The payroll questions are coming in loud and fast. So here we go. Can you reconfirm what a definition of normal pay is and what period I should look at to calculate that? And where can I get that information within Sage Payroll?
Okay, so this kind of overlaps with the previous question about the average hours or the average earnings. The definitions of what is normal pay are still the same as they were under JRS. So JRS said it was basically any normal income and contractual overtime and things like that, but non-contractual commission or additional items that were put through will not be included. And that was the definition by HMRC to start when JSS was announced. In terms of the period in which you have to look, that is still a question to be extended to HMRC, which we're working on. So the guidance on that right now is it will be the same period last year the employee was in work, and then it will be a defined period after that. Most likely, right now we're looking at the tax year, but that's an outstanding question. In terms of how you get this from Sage, we're defining the guidance to the different reports available in the different bits of software. Some people could still use the JRS module if it's over the same period. We'll refer to that as well. But the more we know over the next couple of days, we will be announcing that into next week for our customers to go through.
Thank you, Steve. So I'm conscious we're slowly coming up to the top of the hour, and I want to give everyone at least a couple of minutes before they jump onto their sort of next business call or other Skype or Zoom or Teams call. So this will be our last question for the session. And this is aimed at either Adam or Yogi in terms of who wants to pick this one up. So here we go. If a new business has been set up but not submitted an FPS before the 1st of October, but now needs to close because of local restrictions, can they still use the JSS?
Yeah, I can pick that up, Chris. I don't think they would be able to, because there is a cutoff date in terms of the payroll submissions having been made on or before the 23rd of September. And this was the case with the previous job retention scheme as well, where the cutoff date applied, which was 19th of February, sorry, 19th of March. And therefore, you know, there will be certain businesses that might lose out, or certain employees possibly that might lose out, because, for example, they might have joined in the month of September, but their first payroll submission isn't made until the end of the month. So unfortunately, that there is a cutoff date with all things like these support schemes. There has to be a hard cutoff date. So in that situation, I would say they wouldn't be able to apply for it.
Thank you, Yogi. So this ends our webinar on an update on the job support scheme and their various related measures. As you have heard, there's been some changes quite recently in the last hour by our Chancellor. So like everything, always keep yourself up to date on the latest information. And on the screen, we've got the hyperlinks to some very useful websites where the information is being updated all the time and giving you the navigation to actually where you can get further documentation and support. So what I would like to first of all say is thank you to our panelists, Yogi, Sarah, Steve and Adam, for their invaluable input, their knowledge, their insight, and answering those potentially difficult questions at the end of the session. And finally, to the attendees of this webinar, I hope you're all safe. I hope your business are surviving, and hopefully we can get through the winter and think about how we can actually grow next year. So thank you for attending. I hope you found this useful. And like always, if you need any further support, technical advice, guidance, Sage is always here for you. Thank you.